have the distinct pleasure of introducing a close friend of mine, and in addition to that, of course, someone who I've admired for a long time, Mr. Hasan AlJabri. I'll give you a little bit of a history to his background in this space, and why he, as a personality, is someone we can aspire to look up to, and more importantly, has done some tremendous work within the concept of what we're trying to discuss here, which is responsible finance and advancing responsible finance in Islamic finance. But before that, I wanted to kind of test your understanding of what you think Islamic finance leaders have done. And there's a question that my colleagues up front will put up for you of the key areas that Islamic finance is addressing. Is Islamic finance really considering profits? We heard from Dr. Malia before that it's not a part of their perspective. They haven't thought about it. And if you look at that question, if you could answer it, I'd like to get your perspective on, do you think that most Islamic financial institutions or business leaders consider social governance, environment, social governance when they are transacting, doing business, or they don't? While you're answering that question, please feel free to use your app for doing that. I'll start with a narrative of why I came into Islamic finance, because that relates a lot to why Hasan is up here now. About 13 years ago, I started my career in Islamic finance, and the reason I started it, my mother, in fact, asked me to look into Islamic finance. It seems like it's a very socially responsible thing to do. And it turned out to be that it was. All the books that you'd read about Islamic finance, and if you're an academic scholar like many of you here are, from INSIF or from the IIUM, you'd think that you'd go into Islamic finance and it would be a haven of social responsibility, and you have all of these ideals that you pursue, and you think Islamic finance is going to address all of that. So that's I guess, a utopian world that I was trying to address, and at that time it was obviously a charged environment. You wanted to find positive sides of Islam, especially after 9/11. But the reality was obviously very different. And I'd done a lot of work, and I don't know if Brother Khairul is here. We also launched a social responsibility standard for our Islamic financial institutions with AOFI, and that led to a number of other things. We did a survey for understanding what Islamic financial institutions, and a lot of the results that came about then was really a very, very big delta between what we thought Islamic financial institutions are supposed to be doing, or what we hold them up to be doing. If we talk about what Dr. Malia was saying about the principles that a Muslim, and therefore a representative of a Muslim shareholder, should have in an Islamic financial institution, is not the same as what Islamic financial institutions were doing. In fact, what we realized was that Islamic financial institutions were whitewashing a lot of it, or greenwashing in this context of ESG, and putting in a lot of statements saying that we're socially responsible, everything that we do is socially responsible, and blah, 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 dare I say. But none of it, in its reality, as Dr. Malia was saying, even if you're talking about social governance, it is not considered an integrated part of the decision-making of most Islamic financial institutions. And we can talk about the reasons for it, and there's a lot of interesting stuff that has led to the Islamic financial institution being a remnant or a product of the conventional financial system. Therefore, a lot of the bankers, like Hasan as well, have all been trained in conventional finance, conventional credit. And the new generation that we see in front of us are not in Islamic financial institutions. Maybe they're infiltrating slowly, but the first generation that leads Islamic finance now are trained in a very secular form of finance. They happen to run Islamic financial institutions. So that obviously was disenchanting for us. And a lot of the initiatives that we had done as the RFI Foundation was the precursor to that was initiatives that people like, and personalities like Hasan has led. And I'm proud to say that Hasan is one of the kind of firm first believers in this convergence, and he's done that action. And for an asset manager that is managing now close to $5 billion worth of assets, to move the entire funds to be socially responsible and it's a Sharia compliant asset manager, that's a very big achievement, and it's a big stake that he's making or he's putting on the ground. He doesn't need to do that. There's no incentive for anyone in Saudi Arabia or in the Khalij or in most parts of the Islamic world to do anything that is socially responsible per se. They have to do certain things that are Sharia compliant. They have to fulfill and tick the boxes because that's what most shareholders or investors want. And what I'm curious about now is what's led him as a CEO, and more importantly, what are the circumstances that led him and the institution that he leads to take that path? Because that path has been a trailblazing path for Islamic finance, and hopefully it will lead other institutions towards that direction. If you look now, besides Hasan and SEDCO Capital, we have Arabesque that's doing a fantastic job in advancing what you call high-performance, quant-based, socially responsible funds. And just today we saw the signing ceremony between Satuna Capital and ICD. So the momentum is there. But the question is, how can we speed up that momentum and make this a mainstream issue in Islamic finance? And that's why Hasan's, the conversation with Hasan is very critical to this discussion and taking it forward. So with that in mind, Hasan, I know you worked in Samba, not necessarily the most Islamic of places. It's a Citibank heritage, and it's got a reputation for very high quality credit control, but at the same time also a reputation for really putting profits before anything else. You grew up in the environment. You were trained in the environment. You then moved on to NCB Capital, NCB in corporate banking, and then of course on to NCB Capital to lead it, and then on to SEDCO Capital. At what stage did becoming ESG or PRI or socially responsible become an important priority for you, and what was it driven by?
Okay, thank you very much. That's a great introduction. I hope I deserve it. But really, going to Sharia, you're right, Saudi American Bank was driven by Citibank. It was managed and it was largely owned by Citi. And in many cases, of course, profits were the primary goal. But at the same time, at a point of time there, we started looking into Islamic finance to understand how it's done. So that started with my career, with my conventional career, also the Islamic part. And it always intrigued me that the values that are driven within that, the economic sustainability value, the sharing value, the avoidance of greed, and all those angles. Now, for SEDCO Capital really gave me an amazing platform to practice this in a more dynamic way from two angles. First, from a Sharia perspective, because the family, SEDCO Capital was initially a family office owned by one of the families in Saudi Arabia. The family decided 20 years ago that they want all their investments to be driven on a Sharia compliant basis, believing from a faith perspective, it was fully driven by faith, but they were always ready to push it far in terms of innovation. So they were ready to spend money, time, effort, and also build up the experience. Then later they felt that they need to share that experience as part of the really heritage and as part of Sharia. Sharia always asks us really to share our knowledge with others, especially if it is positive knowledge that can help the evolution of the industry. So from that angle, we decided to create SEDCO Capital, where we manage family money as well as third-party money. And we introduced all kinds of Sharia products. You remember in the past, Sharia products were mainly listed equities and maybe some sukuks and murabahas. But then what we have also, we invest globally on a private equity basis on a Sharia basis. Same for real estate. We also invest globally everywhere in the world. Now, all the banks that we deal with, every country we do business, whether it's US or China, they understand our concepts and they give us the financing and the structures that we look for. Now, I think I would like maybe to see how many believe that Sharia investing is ethical. Let's see maybe if you can raise your hands. How Sharia is ethical? How many believe Sharia is ethical? Okay, at least I would say 80% have raised their hands. Sharia is ethical. I mean, that's the standard. I mean, if you want to talk about faith investing, usually it's ethical investing. And most definitely, Islam is all about ethics. So that's a starting point, where our drive is really towards economic sustainability. So that is very important. As I mentioned before, I mean, we were very happy when we saw Kofi Annan announce in 2006 the United Nations Principles of Responsible Investing. And his principles are quite in line with Sharia investing. It's very clear. The goal is very clear. The requirements are very clear. Okay? And he's really trying to capture a much bigger audience so that the world can avoid future catastrophes, financial catastrophes, and at the same time, the world invests responsibly so that there's more wealth for everyone and everybody can benefit from this big pie. So again, the philosophies align very, very well. Looking at their negative screens, again, you will see that there is amazing alignment. And this happened at the time when the Islamophobia was starting, frankly. If you go to the US and you say, I want Islamic investments, yes, they know us as SEDCO, so they will support us. However, in general, any time you mention Islam or Islamic finance and so on, immediately you'll see eyebrows rising or people not too keen or interested. Same in Europe. So we said, fine, we have fantastic tools that the world has not been exposed to properly, okay? And let's talk their language, especially that we have the same exact goals. So really, it was working on bringing the minds together so that we're able to spread that knowledge even wider than the Islamic world. Alhamdulillah, for the Sharia investment, it is practiced very well in the Islamic world, most particularly in Malaysia, in Saudi, in Indonesia, in several countries. But we want that to go further as long as it makes sense, as long as we have the products that meet the requirements of clients.
But Hasan, do you think was it then just another marketing ploy for you, or a niche to carve out a niche for yourself in this very crowded Islamic finance asset management space?
It wasn't the drive. Really, what we saw when you analyze the 2008 crash, you saw really what created that crash was the mortgage-backed securities. And it was driven by simply greed. It was driven by deregulation. You know, Fannie Mae and Freddie Mac in the US were formed in 1926 to stabilize markets and to by creating the ability to individuals to buy their own homes. What happened through the deregulations in the 90s and early 2000s is that these two institutions forgot about why they were there. They had very clear standards. And these standards were destroyed by the deregulations. And that's when you started hearing bankers and real estate agents coming to widows and telling them, look, why don't you buy a $2 million house? You don't have to pay a penny. And then you'll have a couple owning two houses. They have an income of $5,000 and they're each owning a house of $1 million. So they could not afford to own these houses. This was driven by structures that they could not understand. They could not understand why they're getting their loan, but why not? If we can get it, what's the big deal? And then also driven by a lot of greed by the intermediaries who created these structures, who made a hell of a lot of money at the time. So we saw, okay, fine. The Sharia banks have not been stuck with that. We didn't have mortgage-backed securities. We didn't have CLOs or CDOs for several reasons.
As NCB
or Sharia investors. Okay, I can speak for ourselves as NCB or as SEDCO. We did not have these, but same for Sharia, because they are not Sharia compliant products. Why they're not Sharia compliant? Because of the excessive leverage, the financial ratios, and some of the structures that you cannot see through. One of the major things in Sharia is Sharia financing is you have to understand the product. If you're financing a house, okay, what is the underlying asset? Show me, what is the underlying asset? What is the valuation? You have to be prudent. Do you have the cash flow to settle this loan? I mean, this is normal ABC banking. But our Sharia principles and our financial ratios have protected us from going into these transactions. So when it happened, and we did the analysis, we said, okay, fine. Then we have something to add to the world. I mean, we cannot keep on looking at Sharia investing as an inferior way of investing because it is misunderstood. So let us talk their language, the world's language, which also we learned a lot from. I cannot say that we only gave, we also took. Because what they have given, what ESG has given us, is really the active involvement. And they've given us also the more details on the ESG part. And I'll talk a little bit about that if you allow me. Say, the ESG part, if you look at the governance, all right, when we talk about governance, we're talking about the boards. How responsible is the board? How was the board selected? What are the authorities of the board? What could go wrong? How do they take their decisions exactly? And so on, all that. Then you talk about the relationship of the management with the board. You talk about the different committees, the audit committee, and so on and so forth. You talk about how well do they follow regulations? How well do they respect the regulators in their own country and follow those guidelines? So all of that is done in a more detailed through the questionnaire. And similarly, when you're talking about the environmental side, the efficiency side, then the social side, how do you treat your clients? Are you fair in your pricing? Are you putting anything wrong in the material if you're a manufacturer? Are you destroying, if you like, for example, I'll give you an example that we practiced. One of the investment companies that we deal with in timber approached us, and they were very happy. They were doing this $750 million timber fund. They're saying, look, this is Sharia compliant. It meets all your criteria. So I thought, great, fantastic. But are you in line with ESG? And I started explaining to him. He said, I don't know, what else do you want? So, look, I want to make sure that when you're taking that forest, you're not turning it into arid land. I want it back as a forest. So when you're harvesting, you need to start planting early on. 2, if you have natives, usually forestry happens in Chile, in Brazil, in some parts of New Zealand, Australia. You have a lot of native people there. I don't want them driving the native people out. So if there are natives, I don't want you to drive them out of their own space to create your own forest. If there are rivers, I don't want you destroying the rivers. So that is part of ESG. That's the responsibility, that's the environmental, that's the social, that's the governance. The beauty of that, this didn't make him run away. On the contrary, although his fund was over subscribed, he went back to his board and he said, look, this is what the SEDCO is talking about. Can we do this? And I kept on asking and so on. And finally, in 2 weeks, they came back and said, look, we're committing the whole fund to be in line with your ESG requirements and your Sharia requirements. So there is a lot of influence there for good value. For things from a Sharia perspective, they add a lot of value for us. But somehow the ESG made us pay more attention to these details. And that's why we have incorporated this into our overall, basically, parameters.
Thank you. Thank you, Hasan. But what circumstances allowed you to succeed when, if you look at all the Islamic financial institutions, we seem to have a colonialist mentality or a aspiration towards Western brands. Forget about the principles, because now this is responsible finance has become a mainstream principle in many parts of the world. But at least in terms of, is something sold by Crédit Agricole or by Deutsche Bank, it's the holy grail, right? We don't look into the quality of it or the like, or Citibank, whoever else, and we don't see whether or not it's, intrinsically aligned to the principles. What prompted you to think about this as an approach for taking your collection of funds forward? Why would you do this, and how were you allowed to do this? Given that none of the other banks are doing this, why are they not doing it?
Okay, several reasons. Okay, one is the quality of shareholders and boards that I have. Because when we started to talk about it, it's made a lot of meaning to them to be as responsible as they could towards the societies.
Was that driven by religious considerations, or was that driven by a general ethical framework for the shareholders?
Our shareholders are quite religious in nature, but also you'll find that in addition to that, they have a lot of affinity towards ethical standards and doing well to the societies. And I'll tell you about some of the programs that we're doing out of SEDCO Capital, which is for that purpose. It's not only driving for investing, but also we're sharing some of our knowledge. For example, we've developed a program. It's called Riyali. The currency in Saudi Arabia is Riyal, and Riyali means my Riyal. And that is a financial literacy program that we're managing for the young. We go to the schools and universities, and we give these programs, and they get credits on it. So far, we've done about 75,000 students, all funded by us so far, but now others are supporting us on it as we go. And the idea is to give back to the society where you're doing your business, and they would learn and have the financial literacy to be able to grow better, whether in their jobs or as entrepreneurs or whatever in the future. So that's from one side. From the other side, we always felt that this is our responsibility to see how we can take this basically a standard of Sharia finance into the second level. The Sharia finance and investing had its successes, but also somehow had also some failures. And these failures have tainted it in really, some people would like to stereotype, oh, Sharia, that means that you're slow on decision making, or you are not, you have very limited product dimension, or you don't have the profits, or your cost is much higher. And we wanted to make sure that we're answering all of these. So we have to raise the bar, and we have to raise the standard. And at the same time, we said, okay, we didn't just jump into this without doing our research. We took our funds and we went to specialists in ESG in Europe, and we told them, look, we want to start with these 3 funds. Can you tell me what we need to do to turn these Sharia funds, in addition to being Sharia, being also ESG compliant? And this is what we mean by ESG, okay, based on the UNPRI principles. So they came back. They were surprised themselves. They looked at our first portfolio, which had its listed equities. It had an investable universe of 100 companies. And all they had to do is knock out 1 company. And then they went to the other fund. It was 375 companies. They also had to knock out 3 companies. So that means that the alignment was fantastically there. So no matter how good or bad these companies are, they're not going to impact our performance a lot. Later, we found out that some of these companies that were taken out was great because their performance, actually a couple of them, the performance was very bad in the stock market, okay, because of the rundown of oil prices and so on, and they had their own oil problems. So this is the type of thing that took us. So it's not only the beliefs, it's not only the interest in being ethical or Sharia, but we looked at the performance. How much does it hurt? And we found that really, if it hurts, it's not a big deal. Later on, when we practiced it, we found, on the contrary, it helps. And not only that, we believe that on the long term, all this ESG side, besides the prudence given by the Sharia, actually gives performance. It's not taking away performance like a lot of people may want to believe. It actually improves performance.
So going back to the point of your shareholders versus yourself, do you think the tipping point for SEDCO Capital to be socially responsible, was it driven by them, or was it driven by you as a personality? And the reason why I say this is because personalities probably make a much bigger difference in some contexts, unless there's regulation, as Dr. Suleiman has mentioned, where there is no other driver to it. But was it shareholders who led this charge, or was it that they encourage it, or was it something that you encouraged and they accepted?
It's both. These people have built a very responsible culture in the company, and they're very well known for ethical practices. But that also stands very well with my standards. So there is a great meeting of minds and practice in this. What I was able to bring in to the table is the actual practice. How can we...
practical approach to doing it.
The practical approach into it that is meaningful, that integrates the whole process that's already there on the Sharia with the ethical side.
So why do you say that other Islamic financial institutions and asset managers don't do the same? Is it because they don't have enough exposure to the ESG space? Is that because they're not mandated to do it? Or is it that they have other priorities?
No, I think it's not that they don't want to do it, is the fact that this is a totally new thing. It's a new philosophy, it's a new way of doing the business.
But presumably, it's the foundation of Islamic finance. Everyone, if you study Islamic Finance 101, the first thing you'll learn is social responsibility.
Yes.
I mean, besides all of the other, the actual rules, that's what you learn.
Absolutely, but they were following the standards that are there already. What we're practicing now is adding on top of these standards, additional standards that are not taking away from you. On the contrary, I think they're adding a lot to your practice and to your prudence. And I would see, frankly, that other financial institutions will start following this practice once it gets more and more standardized. And really, I mean, this summit is a great example of and way of moving this whole practice forward. We need more of the activities of RFI and summits like this to create the awareness, all right, in different parts of the world, meet with people like AOFI and other standard makers, develop the standards together, show them that we have, and basically at that time you will see many more institutions following suit.
But in terms of the next stage of development of this particular angle, to make Islamic finance universal as RFI would like to do, what do you think is the roadmap to that?
The roadmap is PEI. What our PEI it's PEI stands for Prudent Ethical Investing. Okay, prudent ethical investing is basically, if you look at the ethical side, we're talking about the ESG. Ethical is the three of them: environmental, social, governance, and the responsibility side. And the prudence side is just the Sharia side, meaning the financial ratios, leverage, cash flow ratios, receivables ratios, and what have you, and also the fact that you don't sell what you don't own. You need to understand the product, asset-backed, and all of that. And I think when you have such a philosophy, okay, and a very clear way and very clear standard, I think we need to push it together so that the others can listen. And really, during a roadshow that we had about last September, October, and we met 87 sovereign funds, pension funds, asset managers around the world, in Japan, in Singapore, in London, in New York, and in San Francisco. We met 87 of such companies and institutions that manage about $2.7 trillion. Okay. And when we talked about PEI, they were really very interested. Very, very interested. And they understood that even the prudence part, when we explained, this is the Sharia side of it. After telling them the whole story of PEI, that really attracted their attention. And many of them are willing and interested to go into that direction.
But going back to my point, and I want to put up the voting question. I want to get a feeling of what do you think that Islamic financial institutions, the answer to your previous question, Gentleman over in the back, can you put the voting answer response up on the screen, please? I want to understand what people think Islamic financial institutions. So the majority, it seems, believe that they consider profit separately from impact, or the leaders of Islamic financial institutions consider profit separately from impact. And some of them consider it, it seems, or they feel that some of them consider it as part of, or integrated as part of their profit and impact. And some of them say it's a variation across Islamic financial institutions. So it seems it's still, you know, what that's suggesting to us is that most of the people here think that they really don't think about them together. And frankly speaking, I've spoken to tons of CEOs, as you know, and we meet all of these CEOs all the time, and I don't see them talking about this, except for maybe Tirad sometimes, but I don't see most of the Islamic bank CEOs talking about this as an important priority for either differentiating ourselves or universally growing the proposition. It's more about, you know what, I have to grow my business. I have to get, I have to satisfy my shareholders. With all of that, I guess what you call friction or inertia, how do you expect to convince others to do this with the RFI Foundation or with other things? What is the approach forward? Where should we focus on getting them? Is there a tipping point? Should be something like an environmental disaster or something that will wake all of these people up? Or is there something that we have to do is it a government thing, like Dr. Malia was saying? Does governments have to mandate it? But then governments, again, they don't really have the incentive to do it unless there's some climate change imperative or there is a regulatory imperative of some sort. I know everyone perhaps some of you may have some questions, so if you have any questions, please feel free to start thinking about them, and I will ask it to Hasan.
Yeah, basically, that is a fantastic point, and that's exactly the starting point, is creating awareness. They're not interested to talk about it because they don't know much about it. You'll be surprised that even when you go to Europe and the States and talk to some of these CEOs of some of the largest companies in the world, sometimes they are not quite aware. And they're skeptical about it as a concept because they don't know, not because it is bad or anything else. They don't understand exactly what it's driving. Immediately, many of them would think that it's taking away from the performance. And it doesn't, most of the time. And let me tell you how. In the morning, I compared for you the Dow Jones Islamic with the MSCI World. And please go to your Bloombergs or Reuters and so on and compare them for the last 20 years. And you'll see what I'm talking about. There is quite a positive overperformance by the Dow Jones Islamic because of the ratios that protected us from the crashes of the market. Not only that, I'll talk about real estate. Real estate, today, you're seeing a lot more regulations on efficiency. And if you buy today, for example, we're very active in the real estate industry globally. We have it in our parameters also. We want water efficient, electricity efficient, the quality of products that are there and so on. And you'll find that actually municipalities and the governments are really pushing towards that also. So the buyer of your building, when we want to sell, they know that the more efficient you are, you will have better buyers. So it will have better marketability at a higher price. And this is practice. Same for companies, same for manufacturers. You know,
so would you suggest that the next step for the Islamic finance industry or the RFI Foundation or people who are promoting this, universities, whoever else, is the next step to raise awareness through, for instance, publishing papers that try to find, or publishing papers to show whether or not Islamic finance or ESG funds outperform non-compliant or just general conventional indices?
Absolutely.
Is that where the next
That's
stage
very
is?
important. That's a very papers are very, very important. But let me tell you something. People do not read a lot.
So
these need to be really. We need to speak. We need to speak in conferences like this. We need to be in on top lines. We need to really make it easy for people to know.
So we should publish papers in the New York Times and Harvard, maybe by Harvard,
and interviews in Financial Times and by the way, the PRI, the UN PRI, that's exactly what they're doing. They see this issue now, and they started creating a lot of in-depth analysis and papers on that to show how it has positively impacted, and they started sharing it. They have a big conference. Well, I hope RFI will do the same role, inshallah. Absolutely. Even a more impressive role.
I'm ready to take questions from the audience if anyone has anything for this very distinguished gentleman. In the meantime, I'd like to put up the second question while we're taking or looking for questions. And please feel free to answer it. We'd like to get your feedback on where you think Islamic finance can make the most impact, and more importantly, where it can provide the most easiest route to success. Arif. No, we can't hear you. You can scream if you'd like.
Is it on? Okay. Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you very much, Dr. Said and Brother Hasan. And it's very inspiring to hear the words that you are sharing, with regards to ESG and so on. And I just wanted to highlight a couple of things. And coming from a practitioner's point of view, being in the data sales for the indexes and meeting fund managers in Asia Pacific. So from a historical perspective, when we were pushing out the Islamic indexes, the fund managers, I'm referring to the conventional fund managers, they felt that this was a drag. They were reluctant and so on. However, I think the learning process and the various events that we have done and collectively as an industry has managed to actually have some traction that they now look at Islamic finance as an alpha generating fund and so on. And even about 10, 15 years ago, when Dow Jones had the sustainability index, which Rushdie Siddiqui was highlighting, and I took this index to the fund managers, and I'm talking about the Islamic fund managers. They were happy to do the Sharia fund, but they felt the SRI sustainability is even more difficult from the point of view that the concept is not there. They didn't believe in the concept, they didn't understand the concept, and some even felt that we are having to pay a price to do the Sharia for all the Sharia related advisors and screening and indexing and so on, and this cost plus on top of the conventional cost of the management side of it. And if we are going to do the SRI, it is even going to be a double cost in terms of managing the fund. And this was one of the key disincentives for them. And there was no real push in Asia Pacific at all. And coming up from China last week in the event, when we are talking about Islamic finance, the audience there themselves don't understand what is Islamic finance. Well, when we can't do a quick fund that gives us 30%, 40%, 50% returns, we now have to comply with rules of business screens and so on. And if we now go to the Chinese government and we talk about SRI, then you need to have ladies on the board of the directors and you need to have child labor practices. Can you imagine taking those discussions in Japan, in China, in India? How will they take all of this? And on a side note, I will also share with you that when we, Dow Jones, and I was Dow Jones with Rushdie, we did an index which is conforming to Indian faith, Hindu faith, Jain faith, and Buddhist faith. And we took this to the fund managers thinking that we can have a second class of solution besides Islamic faith investing into the other faith. And despite 1 year's effort, there was no traction, there was no take-up. And they told us, they were very open and transparent. They said, we, from a Hindu point of view, yeah, we don't eat beef, we have all of these issues, but that is only for food. But when it comes to money, we want the maximum returns in interest or whatever may be the case, that's okay with us, no problem, right? So how do you then educate a population about SRI? That they have to consider this. This is above the faith part of it, right? So therefore, these are the real ground level issues. And I share with Dr. Said Farook. Basically, the education process is massive. because people are not convinced that they are going to be convinced that they have to take care of the environment. And in investing, they look at investing as grab as much as I want, versus, you know, when it comes to faith and prayer and so on, that's separate. You keep it out of the investment world. But I feel that now there's momentum happening, especially in Malaysia, that, you know, there are more talk about doing something on the SRI, ESG space and so on. But the challenges there are also available in this part of the world. That's my point I wanted to share.
Thank you. Any comments on that?
No, I think it's a very valid comment. Definitely it's a big deal, but to be able to make it a global practice, but we have to take it a step at a time, for sure.
Hasan, I find, and despite it being a good marketing ploy for you guys, but PI is a very interesting concept, and I think it has a lot of ability to take Islamic finance to a much broader audience. Why don't you tell us a little bit about what drove it and why? What is it? I mean, you gave us an example yesterday over dinner of the fund managers. Tell us a little bit more about why it would appeal to someone. Well, how did you do it? How did you explain it to them? Islamic finance, because you did have these conversations, but you didn't go with Islamic finance, right? Up your sleeve.
Definitely, actually, the way you will go, when you talk to some of these pension funds, sovereign funds, institutions, many of them have heard, or some of them actually practice ESG at different levels, because in ESG there isn't one standard that everybody follows, like Sharia. Sharia, everybody follows the same standards. In ESG, some of them focus more on the environmental side or green, some of them focus more on the social side, and so on and so forth. For us, we're following all the above, and we put our standards. So when you come with that and showing them how adding those factors have not negatively impacted the companies. On the contrary, when you talk about how positive influence it may have, whether in performance or more also importantly on the basically the societies that they work in, the economies that they work in, the stability that creates for companies when you have good governance. What does it mean having good governance? What kind of stability? Same for the social factors and the environmental factors. That really, you know, you'll find that they're nodding their heads. They like it. They're enjoying that. When you talk about the prudence side, of course, some of them would challenge it, would say, okay, but I need leverage. Of course, yes. When we buy our real estate, we do leverage, but our structures of leverage is asset-backed. And also the level of leverage that we're taking is at a prudent level. We're not going excessive. Okay. Similarly, for the companies that we buy, we don't want to have so much risk in there in terms of financing so that the minute there is a decline in the market, these companies would disappear and all the jobs that are in these companies also disappear with it. So when we explain all these factors and showing, again, just bringing up these slides and showing them the impact of this leverage thing on the listed equity, because that's the one you're able to measure and show proof that that's the case, they welcome it. They like it. Of course, not everybody's gonna follow it. It needs awareness. It needs time. It needs perseverance. You need to go and keep on knocking the doors, and frankly, I expect to see some serious money in there.
So, if I can understand correctly, you think that explaining Islamic finance with all of its complications of gharar, riba, and do not sell what you do not own, in simple terms like prudence and buying something that's asset-backed is more palatable for a Western audience, right? And that will make it a lot easier for us to sell this proposition to a much wider.
Yeah, and there are things, say you're a great. You have great experience in all of this stuff. When you're going there, at the end of the day, you have to have a quality product. So it's not only the principles. You have to have a transparent product that is creating performance. You need to have independent reporting, independent custody, independent administration, in a proper jurisdiction. You need to bring all of that to the table. And then you show them that your performance, you're having all the international standards that they're looking for and the transparency that they're looking for coupled with this. So if your performance is equal or better, they wouldn't mind it at all. That's an important part. But if you want to sell it, just look, it's the ethical side, and this is very important. Well, some of them immediately, for 1 basis point, they'll move away. They want the profits. So, alhamdulillah, it has generated the profits.
Thank you very much. Unless we have any further questions, just one last question from a very eager student.
Assalamu alaikum, sir. Thank you very much for the very interesting discourse there. There are a lot of food for thought for students to ponder upon. As you mentioned, initially when we do start studying Islamic finance, there's a lot of infatuation with the idea of, creating that utopian Islamic ideal. And when we look at the leadership in the industry currently, we realize that there's a lack of Sharia literacy amongst them, perhaps, because they've been trained in conventional finance theories, etc. So the reasoning they apply to their analysis, therefore, is limited in that sense, and which is probably why they are not as proactive in not just negatively screening out the harmful stocks, but also proactively promoting the good ones, which responsible funds are doing. So I actually did come across a study which says that the responsible funds were less sensitive to volatility as compared to Islamic funds, right? So what is stopping the Islamic fund screening criteria from actually incorporating that inclusion and endorsement of positive stocks into that screening process? Number one, I think, could be a question of ijtihad, for example. And also, we must recognize that we're living in a highly dehumanized world where the media is constantly stereotyping, like you mentioned, what Islamic finance is and why people practice what they practice, etc. And I'm coming from India, and I'm very passionate about the cause of farmer suicides, for instance. Every year, farmers in India commit suicides in thousands of numbers. And yet, we don't really have the solution in credit-based financing per se. And therefore, we need to look at equitable financing and participatory contracts. But my question is, how do we really begin as students, to look into those things? Because it's so easy to get disillusioned by what you see currently being practiced. And we need to stay motivated as well. So number one is, how do we address the elephant in the room, Because it's commonly observed that the current, not all IFIs are actually incorporating this esprit corp of Islamic principles. So we must accept that and seek to remedy that. And,
I think you should, so I hate to cut you off, sorry, it's just that we're short of time. Hasan, do you have any comments on that?
Just the question, if you give me... you're the future.
They're disillusioned. They're disillusioned. The millennial generation is disillusioned by
really,
Islamic finance.
Knowledge is very important. And I agree with you. It's important to widen the horizon and not just take a textbook that tells you, okay, these are, as Islamic finance, these are the Sharia principles, and you stop at that. You need to understand the jurisprudence behind that, which is very important and you need to understand banking. I think, and Malaysia has done a great job in the education on both sides, frankly. By understanding both sides, then you'll be able to become innovative and creative to bring up this industry to really higher levels. I think really you're our hope. So
maybe you should apply for an internship with Hasan. You'll learn some of his tricks. Without further ado, thank you all very much. The answer to the last question is up on the screen. As you can see, financial inclusion seems to be the biggest priority for a lot of the people here, and that's where we should perhaps focus our efforts, which is going back to your point that you'd raised, more so than ESG and impact. So Hasan, you should be focusing on that area.
That's reality. It's a financial inclusion program.
Great. Thank you all very much for your attention, and I hope you enjoyed it.
Thank you. Thank you.